Observers of global markets are wondering whether or not Donald Trump is in fact trying to destroy the world. Trade wars have been a very, very key feature of markets over the last 8 or 9 months or so. And in June and July, we've actually seen global trade go into recession. Economies around the world are no longer trusting each other. And we're seeing in the real world pressure to bear on economies. Paul Theron at Vestact. Is Donald Trump trying to destroy the world or build America? What is he actually
Donald
doing?
Trump thinks he's the chosen one, but he is in fact a very naughty boy. He is not an agent.
He's not the Messiah.
No,
he is a very naughty
he's
boy.
definitely not. He has this mad idea. He's using legislation which is not even really supposed to be used other than in an economic crisis like a war to create a trade war with China, which makes no sense other than if you're trying to stimulate your white, non-college educated male base in the Midwest to get re-elected in 2020. So we've got this absurd dance where basically the market goes up or down by 1.5% on a day based on an idiotic tweet full of spelling mistakes from the President of the United States. He spells the names of his own staff incorrectly. He tweeted, "Is Powell or Chairman Xi a bigger enemy?" I mean,
he spelled Powell wrong.
He spelled Powell wrong. So, and then a couple of minutes later, he tweets, "No, we're having wonderful conversations with the Chinese." The Chinese deny it.
The stuff is massively laughable, and we can joke about it. But is he pushing the U.S. toward recession? Because if he's pushing the U.S. towards recession, the rest of us go with it.
I don't think so. I think the economy is strong globally. I think, interest rates are low, inflation is relatively muted. This is all theatre. So to some extent, the market reacts to these things. But I would be very surprised if there were a substantial recession in the next year or so, because I think he's going to carry on keeping things juiced and he'll back off before any real damage is done. We saw that with his decision to exempt Apple from tariffs before December because it would have spoiled Christmas.
Patrick Mathidi, can you be as confident as Paul that this is just simply theatre and we can just ignore Donald Trump and we can continue playing in a global environment which in fact is better off than social media world tells us it is?
So I think the challenge is, one, he is the leader of the first world, so to speak, so you can't ignore him. And secondly, as and when this theater unfolds, at some point it starts eroding confidence, right, from corporate executives all the way through to consumers. So we're not quite there yet, but I don't know what the inflection point is because clearly it's not relenting. So if you look at the current impact, yes, it's not as obvious as one perhaps would assume. But if we start looking at the services component of the trade surplus, of the trade deficit, the U.S. enjoys a surplus against China. That is narrowing, right? And if that goes into deficit, then it becomes a bit of a problem. So there are some telltale signs coming through, but holistically, we're not quite there yet. If you look at U.S. GDP, still very strong. If you look at all the other indicators, industrial production, still very strong. But I'm starting to worry that confidence-wise, because of this uncertainty, and
that confidence is being illustrated in something called the yield curve, and the fact that the yield curve has become inverted. And this is incredibly boring technical stuff. But essentially, what the yield curve in the United States is, it's like a sideways S. And the yield curve over here, the amount of interest that you can expect on money that you lend to the U.S. government has dropped. I think the yield on the 10-year treasuries is now down to 1.93%, which is like the lowest level it's ever been.
Yes. Look, let me explain what you need to know about the yield curve. Nothing.
Why?
Just ignore that nonsense.
But the yield curve is an early indicator of real fear.
It may have been in the past, but it's not statistically sound. The yield curve has to do with what people earn on bonds. But lots of things have changed in the new world we live in. We have lots of bonds offering negative returns. We have inflation at multi-year lows. We have, we haven't had a significant recession in 10 years, which is a very long span. We've got monetary authorities very willing to come to the party, cut rates, do things. So, don't worry about that. Don't worry about that. It's one of those things that is, not like it used to be, like the length of miniskirts and the sort of people that play sports events. Don't worry about that.
Okay. So don't worry about it. But Patrick, you do worry about it.
What I worry about is the whole concept of Japanification. So low yields, low inflation, low interest rates, low growth.
I mean, and again, that's quite an important thing to explain, because for a 20-year period, one of the world's most powerful economies post-World War II went into a period of zero growth.
Everything just flatlined.
Yeah,
right?
and there was no motivation and inspiration to do anything in Japan.
Absolutely. So I worry, I mean, it's a long, rich worry, but I worry that we get to that stage. And if you get there, my word, what does it mean for asset returns? What does it mean for, just growth in general? What does it mean for just the state of the global economy?
And you don't really care about that, Paul, because you are in this
in
mode
my
of
view,
believing of global growth.
What kind of tiny minds would buy bonds at this point? Institutional investors that are trapped, chained to their desks at places like, I don't know, Old Mutual and Sanlam would buy bonds, or at BlackRock. People that are forced because they manage pension money to buy treasury bonds. But why would you buy an instrument underwritten by the full faith and credit of Donald Trump and put that in your investment portfolio? It's a much better idea to go and buy shares in Apple, or shares in Google, or shares in Visa, or Starbucks, or Nike, or any of Microsoft, because these are run by people who aren't idiots and who have strong cash flows selling products that people want. That's why, let other people buy bonds for their own reasons.
In shares we trust.
In shares we trust.
Okay, in shares we trust. However, if you look at some share performances, certainly in South Africa, Patrick Mathidi, and your focus is very much local, what shares can you trust in? I mean, the problem is the only guys making money in the country right now are platinum miners, and that's because the palladium price is through the roof.
Yeah, platinum and gold, I suppose. Look, Bruce, we've had a few shocks and bombs that have taken off around us. If you look at the index in totality, it's very deceiving. It looks like the market is cheap, right? Why? Because we've got everything else that has derated. And yes, we've had some earnings coming through on the resources side. But again, the outlook, if you look forward...
But doesn't the outlook change if Tito Mboweni gets this economic plan up and going in some form, and he might not get to 4% in the short term, he might get to 2 or 3, possibly to 4, if there's sufficient buy-in of his plan, suddenly the outlook for this economy and these companies changes.
My worry is we've had a few false starts. Right. So as soon as 2 years ago with the CR campaign, with Cyril coming on board, there was a lot of optimism, a lot of excitement around the domestic stocks, that Cyril's the man is going to change things, and look where we're at. So I suspect that going forward, there may be an element of, show me the money first, and then I'll follow you in terms of the market actually buying. So they would want to see the earnings come through before actually, putting a high multiples on those. So the outlook on domestic equities, I'm afraid I'm not as positive. I think at best we hold the line, but I do see a lot of downside risks, largely because I don't see where the earnings are going to come through from to actually justify the prices that we're supposed to be paying.
Two pessimists on the show this evening about South Africa Inc. in terms of returns for investment portfolios. Let's talk about some of those investments. Naspers is about to take Prosus and put it into the Netherlands. It comes with a huge bill for the lawyers and for the whole process. It comes with some downside risk in terms of taxes for people who do follow their rights there. There's also the big Old Mutual fight. There are a couple of interesting battles at play for the heart and soul of South African companies at the moment. More on that in a minute.